Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Thursday, April 23rd, 2026, and today felt like a rotation into safety. The averages slipped, sure, but this was not a panic tape. The big story? Defensive money showed up. Meanwhile, a few mega-cap tech names, especially Microsoft, did enough damage to keep the indexes heavy. Add oil in the headlines, geopolitics in the background, and you got a controlled retreat, not a clean dip buy. On the S&P 500 Heatmap, the first look actually felt mixed to okay. More green than you'd expect given where the index closed, but the board was bifurcated. You had steady green across industrials, staples, and utilities, and then these deep red craters in mega-cap tech and some communication services. That concentration of pain is why the tape felt heavier than it looked. That Heatmap split makes more sense when you follow the money. Leadership came from utilities and staples, classic sleep-at-night cash flows, plus some steady help from industrials. On the other side, technology, consumer discretionary, and communication services were the pressure points. The read-through from the session? Reduce beta trim duration exposure and keep risk selective heading into next week's macro gauntlet. Zooming out, this was a dispersion day. There were winners, but they didn't pull the whole market with them. Mega-cap weakness, especially in Microsoft, set the emotional tone. Oil and geopolitics acted like an accelerant for inflation anxiety, pushing the S&P lower before buyers finally stabilized things. But this wasn't a bounce that screams FOMO. It was more like, we're not crashing today while positioning stays cautious. One narrative that clearly moved around the tape? Unconfirmed chatter in AI infrastructure? Multiple outlets cited Bluefin research suggesting Oracle may have canceled an AI rack order that had been associated with Supermicro. Numbers floated around, but this is still chatter, not confirmed fact. The impact was real in price action though. SMCI got hit, and it fed right into broader AI capex durability anxiety across the hardware space. Microsoft was the index weight story. The stock dropped almost 4%, and a move like that changes the whole feel of the session, even when a lot of the heat map is green. Reports tied the slide to Microsoft announcing voluntary employee buyouts, which pushed cost-cutting and restructuring optics to the front. Today, that alone was enough to keep the Nasdaq offered and the S&P pinned down. Texas Instruments was the upside exception that proved the rule. Dispersion. TXN ripped almost 19% after an earnings beat and upbeat guidance. First quarter revenue came in around $4.83 billion, with EPS about $1.68. Plus a strong current quarter outlook above estimates. The key point? This never turned into a broad buy semis day. It was stock-specific strength in a tape that was still de-risking. If you wanted one clean read on the defensive bid, it was NextEra. NEE climbed nearly 7% and pushed to a 52-week high after an earnings-driven rally, according to market reports. On a day when investors were trimming growth duration, utilities leadership like this said the rotation wasn't just noise, it was real positioning. Supermicro was the high beta downside tell. SMCI dropped more than 8%, with the session narrative locked on that unverified Oracle cancellation chatter via Bluefin research. And look, whatever ultimately proves true, today's price action showed how fast AI infrastructure names can reprice when contract durability gets questioned, even on a rumor. NVIDIA didn't collapse, but it definitely traded with the day's message. The stock finished down about 1.4% as traders trimmed AI and hardware risk, with some spillover from that infrastructure anxiety narrative. And even a small down day matters here because NVIDIA often sets the bid and the offer for the whole AI complex. Oracle was another major weight in the risk-off tech tape. ORCL fell almost 6% in what looked and felt like sharp headline-style selling. The exact driver wasn't fully clear in the sourced material, but the market verdict was obvious. It kept enterprise software under pressure and reinforced the idea that big tech was the funding source for this defensive rotation. Looking to the next open, Friday doesn't bring major scheduled U.S. macro releases on this sheet, but the real setup is next week. We've got consumer confidence, then the Fed decision and press conference, and later GDP and core PCE into that backdrop. The question is positioning. Do defensives keep control, or do the mega-cap tech leaders stabilize? On screen, Microsoft for index tone, NVIDIA as the AI bellwether, SMCI for headline sensitivity, TXN for post-earnings follow-through, and NEE as the defensive leadership tell. Bottom line today wasn't about everything breaking. It was about leadership shifting. When the generals bleed, the indexes feel heavy, even with decent participation underneath. So into the next session, keep it simple. Watch whether mega-cap tech stabilizes and whether utilities and staples keep getting paid. Then all eyes turn to next week's macro catalysts and how traders choose to position into them. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.